Imagine a country where the number of people applying for jobless benefits is at a historic low. Yet the labor market is still sending out warning signals. This is the current state of the U.S. economy, where the number of Americans filing for jobless benefits has fallen modestly, but the overall labor market is showing signs of deterioration. But here's where it gets interesting. Despite the low number of jobless claims, the U.S. economy is still grappling with the aftermath of the COVID-19 pandemic, and the recent jobs report has left many economists and experts scratching their heads. The number of applications for unemployment benefits for the week ending August 9th fell by 3,000 to 224,000, which is below the 230,000 new applications that economists had forecast. This is a significant drop, but it's essential to look at the bigger picture. Weekly applications for jobless benefits are seen as a proxy for U.S. layoffs, and they have mostly settled in a historically healthy range between 200,000 and 250,000 since the COVID-19 pandemic throttled the economy in the spring of 2020. However, the recent jobs report has sparked controversy, with some experts arguing that the numbers are not as rosy as they seem. 2 weeks ago, a grim July jobs report sent financial markets spiraling, spurring President Donald Trump to fire Erica McIntyre, the head of the Bureau of Labor Statistics, which tallies the monthly employment numbers. The BLS does not contribute to the weekly unemployment benefits report except to calculate the annual seasonal adjustments. U.S. employers added just 73,000 jobs in July, well short of the 115,000 analysts forecast. Worse, revisions to the May and June figures shaved 258,000 jobs off previous estimates, and the unemployment rate ticked up to 4.2% from 4.1%. Without citing evidence, Trump accused McIntyre of rigging the jobs data for political reasons. On Monday, Trump nominated E.J. Antoni, chief economist at the conservative Heritage Foundation, to head the BLS. While layoffs remain low by historical standards, there has been noticeable deterioration in the labor market this year, and mounting evidence that people are having difficulty finding jobs. U.S. employers posted 7.4 million job vacancies in June, down from 7.7 million in May. The number of people quitting their jobs, a sign of confidence in finding a better job, fell in June to the lowest level since December. And this is the part most people miss. Many major companies have announced job cuts this year, including Procter & Gamble, Dow, CNN, Starbucks, Southwest Airlines, Microsoft, Google, and Facebook parent company Meta. Intel and the Walt Disney Co. also recently announced staff reductions. Many economists contend that Trump's erratic rollout of tariffs against U.S. trading partners has created uncertainty for employers who have grown reluctant to expand their payrolls. The deadline on most of Trump's proposed taxes on imports kicked in last week, though some deals have been made, and other deadlines for negotiations, most importantly with China, have been extended. Unless Trump reaches deals with countries to lower the tariffs, economists fear they could act as a drag on the economy and spark another rise in inflation. Also, new government data showed that U.S. wholesale inflation surged unexpectedly last month, a sign that Trump's sweeping taxes on imports are pushing costs higher. Thursday's jobless benefits report showed that the 4-week average of claims, which smooths out some of the week-to-week volatility, ticked up by 750 to 221,750. The total number of Americans collecting unemployment benefits for the previous week of August 2nd fell by 15,000 to 1.95 million. So what does this all mean for the U.S. economy? Is the labor market really as healthy as the low jobless claims suggest, or are there underlying issues that need to be addressed? We'd love to hear your thoughts. Do you think the U.S. economy is headed for a downturn, or will it continue to grow despite the challenges? Share your opinions in the comments below.